All right, so as we're explaining, this is the trend where price is it right now. So price created this new low right here. So when price gave us this fall, right, it created a new low right here. And if price was going to continue falling, price was not supposed to break this high. So if everything that's happening right now, if price had gone all the way up and then rejected this area right here, as you can see, it actually did try rejecting. That's why we gave these candles right here. That's what we're talking about. These candles right here. They were trying to reject that high. If price had managed to reject that high, then price could have kept falling. Price could have came all the way to fall down here and then create with the impulses, to continue with the impulses, but price got rejected. So when price came all the way down, it gave us a new low. So we had to restart our trend. We had to restart our impulse counting. You see how right here we received 5 impulses. I mean 3 impulse, 2 correction, that's 5. That's the 1, 2, 3, 4, 5 wave count, right? And then price broke out the trend right here. It broke the low that was created by 5 right here. It retested, even created this small range right here. This is a range, even created this range. And as you have explained before, when price was breaking, it's either you would enter as an impulse trade. An impulse trade, as I explained before, that's when you enter a trade when market is already moving in that direction. You want to enter a sell trade, market is already selling, and you enter, that's an impulse trade. If you enter with a sell stop, that's a normal order trade. The normal sell stop or the limit order trades. Those are the normal trade. That's what people should actually learn how to do first before they jump into impulse trades. So see that you would have set your limit right here when price made a low, and then you knowing that you have a high right here, right? You would have set your sell limit. Even though price pushed a little bit higher, price too came back down. This is a range. If this candle had closed above, then you would know your trade is not going to continue down, it's going to go up. But price came all the way down. So you'd have set your sell limit, or for a safer entry, you can set your sell stop right here at the new low that was created. See, when price broke out of the trend, right, it gave you a new low right here. And then price gave you a high right here. Then price came down to give you a new low right here. So when price gave you a new low right there and it went up, then you know that price, okay, it might be consolidating, or it might be giving me a new high for price to continue going down. So you set your sell stop right here. The reason why we set our sell stop maybe a few pips under the low is because if price was going to go up, price would never come down to break below. But the fact that price went up and then came down and broke below, that meant price is going to continue down. That's why it continued down. So that's why sell stops are a safer entry. That's where the theory comes from. So when you saw, if you wanted to enter with an impulse trade, when you saw price coming all the way down, when you see it breaking, you would have entered, or when you see it even rejecting this candle, you would have entered. Since this is the weekly candle, you would have seen the rejection on the daily time frame, on the lower time frame. You would have seen the rejection and you would have been able to enter. And then with the safer option, that's when price is breaking the low. So price broke the low and then it continued down. And the reason why this was a perfect trade is because of clean traffic. Clean traffic, this is something that you have to understand. Clean traffic is when you have these candles. When price move in a straight line, that's clean traffic. These candles are clean traffic. And this, even on the lower time frames, that's the setup that I even trade. These candles are there. these are the candles that you are waiting for price to watch out for, because price, when it consolidates, it's gonna break out, and for it to move smoothly, they need to be clean traffic to your left. So when you see price is in a range, price is in a consolidation, praise, because when you see that, that tells you that price is bound to break out soon, and that's the trade that you want to be in. So price gave us a small consolidation right here. It even gave us a small consolidation right here. And then when it broke out from this low, as you can see right there, price came all the way down. The same move that happened here is the same move that happened this side. That's how clean traffic is explained. That's how you trade clean traffic. It's the same situation as I explained earlier that happened this side. See, when price failed to reject here, it created a new high right here, right? And then when price created a new high right here, we had clean traffic right here, and we had this clean traffic. So when this rejection candle came out, right, you're already expecting for price to push lower. It's a rejection candle. We're expecting price to push lower. So when price broke the low right here, that's where maybe your sell stops are a few pips under that week, maybe 1 or 2. That's where your sell stops are. If you want to impulse trade, that's where you're looking to enter. So when you see price breaking, when this candle is breaking the low, your order is triggered, or you enter. So you're expecting price to move smoothly because of this clean traffic and this clean traffic. So this wasn't much of a trouble. This consolidation right here, it wasn't much of a trouble, because these rejections were actually trying to push price lower. So this range happened in order to push price lower, but they did not have enough buyers in the market, so they could not sell. So they pushed price higher so that more people, more retail traders buy. When they have enough buyers, they sold. That's where we get the rejection candle and the big bearish candle. So the big bearish candle, we got it because of this clean traffic. This is the clean traffic that we're trading on the rejection candle. That's how clean traffic work. Always remember that, because those will be your best trades. They are very simple. They are very clean trades. That's what we look to trade. So with that explained, again, I'm sure you're understanding it a little bit better. So when price broke, right, this was in the attempt of changing the trend. But when price came all the way down, instead of continuing down, right, price came all the way up here and gave us this resistance, right? We had a high right here. That means resistance is being created, and then price came all the way down, gave us a new low, right? And then price came all the way up, and then it broke out. When this breakout happened, that changed the trend. Remember, if the high or the low of wave 1 is broken, the trend has changed. So this changed the trend. And then, so since this changed the trend, now we want to count our wave. So we have this small wave that's going on right here. This is a wave that's going on right here. On the higher time frame, on the monthly time frame, it's a bigger wave on its own, but we're going to count it using what we're looking at right now, the weekly. So price came all the way up. It created a range right here. So I would say the high was somewhere around here. So price gave us a new high right here. When price gave us a new high right there, it gave us a new low right here. And the reason why this low was made is because they were how can I say it? They were fooling the retail traders that price is going to sell. You see, we have this strong bearish candle. It's a very strong bearish candle, and that's normally our sell signals. That's our sell signal. As you can see, price actually had made a low right here. So you being as a retail trader, you're expecting price, since price has rejected this, and price you have your low right here, and then you see this candle breaking. As a retail trader, you are trying to sell. You'll be selling, but this candle was created And as I mentioned earlier, if you see this candle not breaking the low of our previous candle, the trend has changed. It's not going to go anywhere under. So for you to trade this trend, you had to wait for this candle to break the low. But no candle broke the low, so you had no trade right there. That's why we use sell stops. So when this candle closes, you put your sell stop a few pips below that candle, right? If you don't want to use sell stops, you wait for this candle. Like I explained earlier, it's very important to note this. Price will move a bit higher to retrace for it to push lower. So when price pushed higher, you'll be waiting for it to come back down. So when it's about to break and continue down, that's where you enter with an impulse trade. But then this candle did not do that. This candle closed inside the body of our previous strong bearish candle, invalidating the sell setups. So you are not supposed to enter there. Most retail traders would have entered there because they're still expecting price to continue down because they saw this bearish candle. That's where the trick is. That's where the tip is for us. That's where our advantage is. So when more and more sell orders came, the banks or the institute reversed price to go up, because they had enough sell orders. So as retail traders are losing money, they take some of their profits to come back down to near, you can say near or close, or sometimes it's the exact price, sometimes it's just near, to add more buy positions. So when price comes all the way, so when they saw the price coming all the way up here, right, they closed their sell trades in a loss and they bought. Once they're buying, the banks take some of their profits, push price back to that range for it to continue going up. So when it comes here, down here again, right, retail traders are gonna sell. So the more they're selling, the more orders that they're getting for them to push price higher. So when they push when they have enough sell orders, they're going to reverse the market again. But you would know this because price created a new high. So when price gives you a new high like this, don't expect to sell price because price is moving higher. So when it comes down and it hasn't touched this low, then you know price is still gonna move up because it's just creating a new low right here. If you wanted to go down, it would have came all the way down here. So if you see price doing a high and then it comes down and then makes another high and then it comes down to that support, that's why people trade double tops or double bottoms, because it came back to that support. Don't just trade patterns that you don't understand. This is why people trade double tops or double bottoms. That's what you need to understand. Triple bottoms or triple tops, that's where the psychology is. Price has to come back to the support, to this support. Price is not supposed to create a new support. If it creates a new support within a range and it's higher, that's pushing price higher to break out, to make a bullish breakout. If it was pushing lower and creating a new low, price is pushing down, price is gonna break out on a bearish level. So you would have waited if you didn't catch this breakout and you saw this breakout happening and then price pushed low and created a new low. All you had to do was wait for price to break this high. That's when you enter. You see the break here, you enter and you have a clean the clean traffic trade. See, clean traffic. You see this area? Yeah. That's how trading works. Those are the areas that you need to target. So we have explained the entry of the trade right here, right? So we had our low created right here, right? So we're counting our trade now. So we have one, right? And then we have these two, right? So we had one, and then we had two, and then we had three, and then we had four, and then we had five. So we had one gave us a new two right here, and then price came down, it created a new high, and then it went up. So remember we said within a trend there is a trend. So within 1, 2, 3, 4, 5. Remember we said within a trend there can be another trend. So we can have 1, 2, 3, 4, 5. And this is what we have right here. 1, 2, 3, 4, 5. I hope you guys can see that. Can you guys see that?
Yes, yes.
All right. So if you had counted 5 waves in your so you know that inside inside a wave there can be another wave. So if you see your wave 3 is counting, right, and then you see here is the best part. Wave confluence. Remember we talked about that's why we have highlighted this resistance. We talked a lot about this resistance. So if you see price reaching that resistance, right, and you know your Elliott wave, or you know your count, right, and then you have counted your wave right here up to 5 right here. You see you get your 5, and then you see this rejection candle. That's telling you that price is going to give us correction 4. So if you were attempting to trade this, in your mind, you know this is a retracement, this is a correction. So you're not expecting it to go far. So what you would do, you would trade it aiming for the clean traffic, the clean candle. So you would have entered right here, right, when it breaks the low, and then you would have your take profits right here. Because remember, there is a support here. We have a rejection right here, and price had to break that high. When price closed there, it created a high. So price had to break that high, and it did break that high. So you would have expected to trade your take profits somewhere there. You could even take your take profits here if price had gone lower, but it did not go that far. But that's how it works. So when you see 5, then you say, okay, now I have 5. So now I have 5, right? That's on a lower time frame. This would show clearly on the daily time frame, but now this is the weekly time frame, right? So you have your 5. So if I have reached 5 in my impulse 3, I'm expecting correction 4. And when you get 4, you know an impulse wave 5 is coming. So we had 4 right there, and then we got 5. So okay, so you see price came all the way down, right? It created a new low right here. See, that's where we get this zone right here. Can actually even update our zone and put it somewhere at the base space right here. So now with our 4, right, we get our rejection 4, and when price comes back to our resistance, right, remember on the monthly time frame, this was a consolidation, and this was the new low that was created in our consolidation. We talked about it on the monthly time frame. And when you see a new low being created like this, and it's respecting the our rules, remember 4 should never get into 1. It's respecting that rule. And then you see rejection candle. See, this is a rejection candle, right? See, this is a rejection candle, right? After that rejection candle, you got a consolidation or a range right here. So if you see a rejection and an impulse happening, and then you get a consolidation or a range, that's your correction. And that's what happened. We got a consolidation right there, and there wasn't any candle that broke the low of that consolidation. That told us that price was going to keep pushing up. If price was going to push down, it would have created a new low. See, on this consolidation, price would have came and closed somewhere around this area, but price didn't. It closed above, causing price to push high. And then when price came all the way high, it even broke out on this candle. So this was more of a retest candle, and this retest candle is retesting our consolidation right here. So you would have seen this candle happening, right? Instead of thinking that this candle is rejecting, right? Watch, it does not close inside this consolidation. It closes above. And when it closes above, right, that should tell you, oh, I had a consolidation before. Maybe price is just retesting, right? You have that idea. For you to sell, you need to watch price get back into the range. But it didn't get back in the range. The next candle even came out bullish and went above. That confirms that price is broken out of our strong resistance. Now, here's the tricky part. when price closed above, right, you see the next candle came to retest the low again. This was our new established low. So look at it this way. Price consolidated right here, right, with a new with this as a resistance when this was consolidating, right? When price broke out, remember we said when price breaks out, right, it retested with this wick right there. That means price has established a support. Remember what was resistance? Price breaks out, it retests, it rejects, it's established that as our support, our new support right now. So when price went up, it broke out of them of the resistance, that strong resistance, right? And then it retested the support, establishing the support. That's how the support is getting stronger. It went up, it broke out, it retested, it went up again, it closed above. That should tell you that buys are very important right now. And watch how many times price comes down to that area. 1, 2, 3. That should tell you that the big market or the bankers are putting in their trades around that area. So that's where they were entering, right? And then if you see price still rejecting our support, if this candle right here, if it had closed anywhere around this area, right, then we can expect price to give us to continue going down, because it has rejected this resistance, but it didn't. It closed back above, and when price closes back above our resistance, that means price is going to push higher. That's how we have price pushing higher to our next resistance, and that's how 5 was completed. So when you draw your let's say you have your low right here, right? I'll do this. We're going to put a low right there. We have a low right here, right? You want to put your trend right. So let's say you want to draw your trend lines, and let's say maybe you have this information only, and this information for 5 hasn't happened. You only have like 1, 2, 3, and 4. That's what you have. 5 hasn't happened yet. So this is what happened. You'd have drawn your trend line like this. See how it's on wicks, right? It's not cutting into candles, right? And you have that information, and then price came all the way down. It actually did break your trend line right here, right? And then you have this candle, so you would be preparing to sell right here. Maybe you would have set your sell stops right here. Like I said, if price wanted to go down, it would have broken the low, made a new high, and then kept going down. That's what price would have done if you wanted to keep on going down. But it didn't. The next candle rejected. That means you would not lose anything, because your sell stop would not have been hit. You're still safe. So when you see it rejecting and creating the next candle, right, you're waiting. Okay, that means we are having a fake out right now. It might be a fake out. Those are now your possibilities, right? And then the next candle broke out. As you can all see, the next candle broke out. This candle broke out. We have our wick that made the retesting, the correction, and then we have the breakout. It closed above. So when it closed above, it created a new support right here. So when price created a new support right here, right, that's giving you new information, right? So instead of keeping your trend line right there, right, you adjust your trend line. So because this is now inside another wave, so adjust your trend line like this. That's how you adjust your trend lines. So how do I use this trend line to my advantage? If this price comes all the way down and then it closes below right here, closes anywhere below here, we're expecting price to keep on going down. Why? Because price has been ranging around here. Price reached a very strong resistance. Price is consolidation. If it's consolidation at a high, that means at a high, that means the probabilities are on that it's going to break down It's going to change the trend. If it was consolidating at a low, then we're expecting a bullish breakout. I'm not saying the bullish breakout is not possible on this on this area. The bullish breakout is very much possible on these terms. This can also be a wave right here. We can have 1, and then we can have 2, and then this could be 3 to keep on going up. This could be what's happening right now. So until price breaks this resistance or price breaks this support, we are ranging, we're consolidating, we do not have any opinion in the market until when price does something like that. If it breaks above, then we have an opinion that price is going to continue bullish. If it breaks below, then we have an opinion that price is going to continue bearish. So your bearish would be strong on the fact that you would have a strong bearish candle, right? It's breaking support and it's breaking your trend line. So when it breaks your trend line, it retests and then it comes down. That's where the whole break, close below, retest, and then for it to continue down. So when it's breaking that low that was created, that's when you enter. You have watched the retrace, the retest, you're watching it come down, and then when you see it breaking the low, you enter. Of course, you can enter when it retests, but then you have to know what you're doing for you to enter right there. It's better if you don't know what you're doing and you're not sure of the trade, it's better to wait for it when it's breaking the low. Waiting is very important. When it's breaking the low, you enter. You won't miss anything because you can enter with a big lot knowing that you are correct, and most likely you will be correct. But if it breaks above, then the wave is just continuing. That means this 5 wave is there's a 5 wave inside it. So the 5th wave is another wave going on inside it. That's what it means. So right now we're at a very important area that we need a break either above or below. Are you guys understanding?
Yes.
All right. Do you guys have any questions? No questions?
None for now.
All right. I think we should end here for today, and you guys will need to send me charts of your trend lines and stuff like that so that I can see how you guys are progressing or not. And also, don't forget the zones on your chosen pair. Send me your zones so that I keep on checking on them. So it's better for you guys to send them every day. So because we're always updating our charts with the new information that we're given. So the zones that you might have drawn today might not work tomorrow because you're drawing your zones on the time frame that you're using. So we were doing our whole session on the weekly and the monthly time frame because we're just we're learning. But the monthly, you do your zones on the monthly, the first day of the month. Update your zones. The weekly, it's better to check what's going on or if it needs to be updated on the first day of the week. Then the daily, it's better to know how your daily candle is closing and how it opened, but it's always best to concentrate your zones to concentrate on the time frame that you're trading. So I trade on the 1 hour time frame. My zones are more concentrated on the 1 hour time frame. So if I was doing my analysis right now, I would be doing it on the 1 hour time frame. So I would go on the 1 hour time. I would know what's happening on my higher time frames. Of course, I would do. But I would also concentrate my zones on the time frame that I'm trading. So this is how I would do my analysis right now. Of course, this is a high. I can't neglect this high. And then this is my next high. This is also a very important high. And then this is my low, and this is my other low. So what I did today, this is how I traded the market today. So when I woke up, right, when I came on the markets, this information wasn't there. We had a high right here and a low right here. So what I did was I waited for this low to be created, right? When price closed here, I waited to see if price was going to create a new high, and price did create a new high right there. So when price created a new high right there, right, I waited for this candle to close, and when it closed, I entered as it broke the low right here in order to get this trade, and I did catch that trade. Why? Because I also had clean traffic right here. The candles are small, but I had clean traffic right here, and I was able to get out of my position right here because I wanted to trade this candle right here. This candle, I could have traded it, but price didn't break the low right here. You see, price came down. It tried pushing down, but this candle came back to close around the support that was created by this candle. It was resistance, but now it's support. So price reversed. So if I want to trade any buys, right, I would wait for price to come all the way up and break above this high. Then I'll trade buys targeting this resistance. If I wanted to sell, I would wait for price to break this support right here for it to even go lower. Because if it breaks this low on my 4-hour time frame, price will continue going lower. Because on my 4-hour time frame, I have clean traffic. So you can also use that to determine if price will break a minor zone. This is a minor zone. It's not that important because price hasn't retested that much. Is it making sense, guys? Yeah.
Yes.
So these are the only zones that I needed today. I didn't need anything else that's fancy. That's all I needed. That information and knowing if when price is breaking. You can set alerts or you can just watch price as you're sitting on the charts. So that's it for today, guys.
Can we make use of trade line in this particular 1 hour chart?
All right. The trend line right here would be, see, the market is going down, right? It's not going up, it's going down.
Yeah.
See, as much as we have these areas are going up, these are corrections right here. This would have been an impulse if price broke this low, but price didn't break this low. So, and price isn't broken this high, so price is correcting right here. But if I wanted to put a trend line, right, this something like this would have been my trend line right here. You see it? So if price goes above, they see how there's confluence. I have my resistance and I have a trend line. So there's confluence. That means it will be a strong breakout. So if price breaks, right, and then it hits this high, and then I see price coming here, it gives me a bearish candle, and then it gives me a bullish candle rejecting, I would enter because price is going to break this high, aiming for this high. So this would be my trade. See how it would be my trade. There's clean traffic right here. So that's how it would be my trade.
Okay.
All right. So are you understanding on trend lines?
Yes, I do.
All right. So do you see how that line that I put is, let me put it again. So we're putting the line there because we have an impulse, we had a correction, we had another impulse, and then we had a correction. Until price breaks this high, price is consolidating, so it can do whatever it wants inside here, unless if it breaks this high or this low, we're consolidating. So if it breaks this low, it's going to create another impulse. If it breaks this high, then it's creating, it's the trend has changed, it's now bullish. So with that information, I would take my wicks and then I put my trend line on my wicks like that. So if I'm using my trend lines, I would take right here and then put it right here like this. So you see how it's cutting through the wicks and not in the candles. You guys can see it, right?
Yeah.
Yeah. So
Yeah.
yeah, so that's how we'll continue. We'll do more trend lines tomorrow or Friday, if that's okay with you guys.
Okay.
Yeah, we'll
Yeah.
continue.
Yeah, it's okay by me. I don't know about the other.
Yeah, we'll do more on them.
Okay.
If you guys have any questions, please message them to me and I'll make sure I respond to all of them. And don't forget the chats so that I know how you guys are progressing.
Okay.
All right. Bye, guys.
Right. What about the PDF?
Oh, I pinned it in the group.
Plus,
Oh, okay. I'll check it.
do you have any other books apart from that one?
Yes, I'll be sending books probably depending on how fast you guys finish them. If you finish them quickly, I'll send them maybe each week. If you don't, then I'll send a book each month.
Oh, it's okay. So we have to finish this one first.
Yes, because if you don't finish that one, then you don't know the information that's in there. We can move forward.
Okay.
And that one is on emotional intelligence. So it's very important you read that because we have to create a strong mindset and we have to learn how to control our emotions.
Yeah. Okay.
Yeah. All right, so bye, guys.
Bye.
Thank you so much for your time.
You're welcome. It's a pleasure.